Welcome back to the channel. My name is Brad, and today I have a special guest again. David, go ahead and introduce yourself so anybody that doesn't know who you are.
Thank you so much for having me, Brad. My name is David Chikansky. I'm the CEO, CIO, and founder of Quantify Funds. We are a new ETF issuer just as of 15 months ago. Our flagship first ETF is the stacked ticker BTGD. The concept there is using an institutional process called return stacking or portable alpha to provide a leverage ETF that takes some of the onus off of the allocator to do the rebalancing yourself that a traditional leverage ETF typically comes with, and embedding some of that rebalancing within the ETF. So the concept here is, instead of just leveraging, what that actually means is when IBIT is down, for example, a 10% drawdown, we tend to be down actually less than 10% when compared to IBIT in BTGD. And that allows you to have this amazing leverage ETF that has potentially more upside than just Bitcoin alone, but a dampened downside versus just owning Bitcoin on its own. And again, it's not magic. It's just taking advantage of diversification between two uncorrelated assets. And honestly, I think it's really hard, especially with leverage, for the end allocator to be responsible for all of these rebalancings when everyone wanted to buy Bitcoin when it was at 125. As we were talking about pre-show, how many people legged back in below 90? Doing this rebalance is really, really valuable to long-term returns. You can't predict what any one asset class might do, but you do have a chance of predicting what the correlation will be between different asset classes. And taking advantage of that diversification, we think, is one of the easiest forms of, if not increasing returns and lowering downside and volatility, at the very least, just dampening the volatility of owning some of these ETFs. And sometimes when there's so much volatility in the market, being able to confidently hold a security or increase your allocation during those drawdowns, we think, is so very important for end investors' experience as a shareholder in our ETFs.
And we're going to go back to more of the basics. You have Bitcoin in one basket, and you have gold in another basket, and you're stacking them. So $1 gets me $2.
Absolutely. So it's 200% total exposure. Every dollar you put into it gives you $1 of Bitcoin exposure and $1 of gold exposure. So it's kind of addition without subtraction in your portfolio. It allows you to get a little bit of overall portfolio margin by adding a little bit of leverage, and it does so intelligently. So it's built to be bought and held. Most traditional leverage ETFs have to be traded on a regular basis 3 to 4 times a week to reach your intended leverage target. There's nothing wrong with traditional leverage ETFs, but you do have to trade them to get your intended target. If you want that 2x that you see that they're describing as their investment philosophy over a longer period of time, you have to trim it when it goes up and you have to buy it when it goes down. And that can be very hard from an emotional perspective when markets get very volatile. And so, if anything, we're just embedding that process of rebalancing into the ETF. Every time there's a 3 to 5% drift between Bitcoin and gold, we'll be rebalancing back to 100 between the two of them. If you look at yesterday, which was Monday, Bitcoin, fell significantly versus gold, and it caused a rebalance. So that means we trimmed a little bit of gold and bought a little bit of Bitcoin. And today, the exact opposite is happening. Bitcoin is running up, and gold is actually pulling down back a little bit. And those rebalancing periods over time compound to a very, very high degree.
To get this stacking, is there a leverage cost, and what is that leverage cost? Because a lot of people don't use leverage or don't know enough about leverage. Is this safe for some retiree? How does this leverage thing work?
Yeah, so nothing's free in life. There is a cost to leverage. So we are primarily getting our leverage through the futures markets, which is essentially the cost of leverage of T-bills, which is a very, very cost-effective form of leverage. It's one of the cheapest and most cost-effective forms of leverage we have on this earth, and it's likely much cheaper than what individual investors can get in terms of margin rates on their own account. And it also allows them to have a little bit of margin without having to worry about margin calls or dealing with anything like that. So we think it's a much more responsible form of margin for individual investors who are deciding to add a little bit of leverage to their portfolio, especially if you are not a former, quant or finance hedge fund manager, et cetera. It's a lot easier to have it embedded into this fund. You're not going to get margin calls. And one thing I would always point out when you're looking at leverage ETFs, not all leverage ETFs are equal and constructed the same, and the cost of financing can vary drastically across different products and different time periods. So some leverage ETFs that you see in the marketplace, especially some of these, for example, like 2x single stocks on really small cap stocks, the cost of leverage in those using swaps can be really, really high, and it can spike at any moment. So all of a sudden, if there's a lot of volatility or in an individual name, the cost of leverage at that time goes up significantly. It could go up to 15, 20, 25%. But in Bitcoin and gold on the future side, we don't really see that similar spike. And so that's why we felt much more comfortable here using futures for Bitcoin and gold. We'll also introduce a little bit of synthetic options into BTGD at times when it's advantageous from a cost perspective and tax loss harvesting as well. But again, just using all the tools that are available to us in the ETF wrapper. At the end of the day, the ETF wrapper is the best investment vehicle on earth. It is the most tax efficient investment vehicle. It is the most liquid and accessible investment vehicle. You can borrow against it. You can write options on it. And most importantly, you can sell intraday. If you're owning anything outside of just the S&P 500, you probably want the ability to rebalance that. What is the point of hedge funds if you can't rebalance them once they do well? You allocate to a hedge fund, and if it does its job and it hedges when everything falls, you ask for your money back, it'll take you 18 months. You do that in ETF, you get it at lunchtime, and you can redeploy it as you see fit. And so that's why our whole firm and concept is trying to build hedge fund products and tools to give you guys the same level of offerings and portfolio exposures that the hedge fund world would get, but to do it in a way that you can feel more confident buying and hold. So responsible leverage is really what we're going for here. And so BTGD is our first flagship product.
Eventually, you're going to have income funds come out because that's going to be a question. And everybody needs to stay tuned for those because we'll cover those as soon as they come out. But it's going to be this same type of strategy. Is that correct? Where it's a stacked fund?
Yep. So we're using that same concept of return stacking, and we'll be stacking, for example, broad US equities, Bitcoin, gold, and treasuries in combinations, and putting the onus of that rebalance on us, just like BTGD. The most certain thing in this market is correlations and not returns. You cannot predict returns. You can only hope to predict what correlations may be over time, and taking advantage of that and offering a leveraged vehicle that does the difficult rebalancing between two broad asset classes for you, we think is the best tool to give income generating ETFs that you can hold over a long period of time that can also add to the total return of your investments with intelligent structured leverage and reasonable distributions.
I know that we're looking forward to those coming out. David, anything else that you'd like to talk about before we close up today?
Just say I appreciate you and I appreciate being on your channel. And I've been saying this a lot recently, but I think the individual investor space knowledge base is growing at such a fast pace, and I'm so impressed by it. And I think in many instances is growing way past what the RIAs and financial advisors knowledge base is, cause them to have to try to step their game up. But I think I'm so grateful for you and all of your cohorts out there. And thank you for doing the due diligence and the deep dive. It gives us confidence to make more and more complex products that we think actually make sense. And 5 years ago, the name of the game in the ETF industry was, if it's too complex, no one will buy it because they want to hear it in 5 seconds and move on. And guess what? Like, trying to add value and alpha to the investment world is really hard. And you can't do it with something that you can explain in just 5 seconds. So I'm so grateful for you and everyone else in these communities for like doing the deep dive and doing the research. And I'm very excited to see where this investment world grows towards.
And I know that we're going to be very excited for the income funds coming out from you guys. So
Yeah.
everybody should stay tuned for those. And if you guys like this kind of content, please like and subscribe. And we cover different ETFs and look at different strategies just to be able to make sure that we have some type of income, especially in retirement.